Hi everyone, it's your daily 10-minute business and finance news wrap for this Wednesday, the 9th of June 2021. Consumer confidence has fallen because of the Victorian lockdown. The Westpac Consumer Sentiment Index down 5.2% to 107, but any reading above 100 suggests optimists outnumber pessimists. For more, here's Matthew Hassan from Westpac.
So it does look to be a persistent recurring drag on sentiment. We do see this pattern of a sharp pullback followed by a recovery, but what we're seeing out of the expenditure patterns over the last 3 to 6 months is that a persistent lockdown, you never really catch up for it. So we saw the first quarter consumer spending, we were still going through a reopening across many parts of the economy. Those mini lockdowns have been periodic drags for every state. And so while ever we're still in this pattern of return to brief lockdowns, we're likely to continue to underperform where we would otherwise be with spending in particular. The outlook for the economy is still strong. As I said, our base case is that this is just another minor setback in the reopening and recovery phase for Australia. We'll still see well above trend growth this year for the economy. We're still coming out of last year's COVID lockdowns, and those effects on the economy are still dropping out of the picture. We've still got a very strong growth performance, but it could be better. And I think it's these periodic interruptions from state lockdowns that is just restraining that recovery at the margin a little bit.
Matthew Hassan there from Westpac. Now, still despite that softer economic news, both Westpac and NAB lifted their economic forecasts for GDP, and it comes ahead of some major policy announcements in the next couple of weeks. First of all, the end of the Reserve Bank Board's term funding facility and the board meeting itself in about 3 weeks' time. Here's more of Matthew Hassan.
No, we don't see any particular flow-on effects associated with the term funding facility. What's probably going to be more important for markets and for fixed-term rates in particular is the July board meeting has flagged an important decision around their yield curve targeting policies, and we think that they will opt not to extend that target for another 6 months. So we may see some fixed-term rates start to push a little higher over the next few months. The other key question will be around their quantitative easing program. The term funding facility was more of a stopgap measure to ensure that credit continued to flow in a good way domestically. The need for that policy has diminished. These other policies around the yield curve target and around quantitative easing, asset purchases, they're really the main thing for policy now.
Matthew Hassan there from Westpac. The Australian share market fell 0.3% today, the 207,270. The banks and miners declined. The technology sector, one of the worst performers. For more, I spoke earlier with Adam Dawes from Shaw and Partners. Adam, what drove the market today?
Yeah, well, look, the ASX 200 reset its record highs this morning as the miners and the banks and the healthcare stocks fueled a decent rise. But then the stock market has eased and, in fact, going lower. Obviously, we followed Wall Street's outcome from Monday, but commodity prices were the one that really sort of kicked the market higher. Brent oil was up 1%, and iron ore was also up. But I think the thing that sort of kept everybody in check and the market in check was that the Westpac consumer confidence figures came out, and they were down 5.2% compared to expectations of a 0.8% growth. So I think that's what helped this market fall later in the session today.
I guess the other thing, it's all about inflation at the moment, isn't it? The US data on it's coming out later this week. We heard from the RBA Assistant Governor Chris Kent today trying to play down inflation fears, saying that the return of bond yields to pre-pandemic levels don't point to inflation concerns. What are the markets thinking about that?
Well, look, it's interesting, and it's certainly a global phenomenon. Certainly in China's inflation data revealed today that prices grew by 1.3% compared to expectations of 1.6%. So that certainly looks a little bit better, a certain decline. But look, we're certainly waiting on the US, and so the big guns in US inflation data comes out around about 10:30 p.m. Australia time on Thursday evening. So certainly traders are going to be waiting for those figures because that runaway inflation seems to be the biggest fear at the moment in the market. Consensus expectations for annual growth in core inflation are going to be around about 3.4%. So it certainly looks like it's quite interesting on a global market or a global expectation for inflation.
Has it changed the way you're investing though?
Look, here in Australia, yes, it has. And I think I guess the market's taking inflation in its stride. But I think people should definitely be looking at inflation and the way to hedge against inflation, and that's what you're asking. Has it changed the way we invest? We're certainly picking up some more infrastructure stocks. We're holding more REITs or real estate investment trusts, and we're putting more gold into clients' portfolios. And gold is a fantastic hedge against inflation. So yes, it is changing the way we're looking at investing in the market.
The lockdowns in Melbourne are coming to an end, announced today, but these things are having an impact on listed companies. For example, we heard from Regional Express Rex issuing a profit warning. What are you seeing?
Yeah, certainly. Country Airline Rex says that the COVID-19 or the outbreak and from Victoria has certainly scuttled its hopes of breaking even this financial year after the state's lockdown forced it to cancel dozens of its flights to and from Melbourne. The company said that this morning that it would have severe disruptions from their networks, and then they are forecasting a full year statutory loss of around 15 million. Look, I think that's one example of what is happening across Australia and around the world, is that it's very hard to plan or to give any kind of ongoing reassurance to the market because of these snap lockdowns that are happening. So look, I think there's more to come in this market, and I think investors need to be nimble when they're looking at their investments going forward.
Adam Dawes there from Shaw and Partners. Don't forget you can watch SBS World News from 6:30 p.m. weeknights for more on the money, and you can listen to this as a podcast across numerous platforms like Apple Podcasts, Spotify, the SBS Radio app and SBS News website. You can follow me, Ricardo Gonçalves, on Twitter, Instagram and TikTok at Business Ricardo. This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.